Sanjiv, what a move the markets witnessed in trade yesterday. Are you saying I told you so?
Yes, good morning, Awan. Excuse me for my throat because the Delhi cold has caught me. 2.8 degrees, but no complaints. New highs are good enough to make up for a sore throat. Yes, a little bit of froth now, so be watchful. Learn to book your profits. I think the index may have hit a plateau. You could see another 100 points on the upside, but be stock specific above 22,100.
Be stock specific. So give us a little bit more inside strategy, because a lot of the heavyweights now are really pulling their might, be it the likes of a Reliance Industries, hopefully an HDFC Bank, and you do have some of the IT stocks that are making a comeback. And how?
Well, what a comeback by IT stocks and Reliance. And I've been telling you that, market was frustrating the index, but Reliance, HDFC, and the IT stocks have taken your breath away. And that puts to rest, never say never to the stock market, and to, believe in what you invest in. I still think there is a lot of room on stock specific. One underperformer has been Kotak Bank. We think that that has started to show very good traction. The results from Kotak may be arguably the best. So we are overweight on Kotak Bank. We are accumulating. We are using this fall in Dixon as also an alternate to buying, because we think EMS is here to stay, and these businesses are not for the next 6 to 9 or 12 or 1 month. They're for the next 10 years. We know that electronic manufacturing services are going to be the mainstay. So Dixon is a stock which over the next 3 years can even scale 10,000. That is one more stock which we have in our portfolio from much lower levels we are adding. And Paytm, I think now the world has woken up and realized that the RBI guidelines were temporary. And, I think that transition will be extremely quick from that sub 50,000 to over 5 lakh. And the margins are telling me that now Paytm is very reasonably priced compared to the other fintechs. So as a disclosure, these three stocks are in our portfolio. We are covering these stocks. We think they can be upside. Another stock which I would like to mention is Nalco. This is one PSU mining stock which has moved from 90 to 130, but I still think there is potential to go to 175.
Right, okay, that's the take coming in on Nalco. Today, of course, you've got HDFC Bank, which is slated to come out with its numbers. Kunal, let's map the charts of both HDFC Bank and Kotak. Which one do you think is going to win the race as of now?
So as of now, the stronger one, Aisha, is HDFC Bank without any doubt, because when we look at the chart setup, the consistency, it's a lot more better. Now, in the last 2-3 months, what was missing for HDFC Bank in the last 1 or 2 years was the correlation of the stock with respect to the Nifty movements. Now, whenever the index moved up higher and moved into a new tangent of a breakout or a new high altogether in the last 6-8 months or so, HDFC Bank remained into its own trading range. But this time around, the last 2-3 months, we've seen that change happening for HDFC Bank, where from the sub 1500 levels, the stock has moved closer to that 1700 odd mark. Very recently, the stock managed to break out of the 1700 levels. Now, that itself indicates that after a 20% kind of a rally for the Nifty, the stock has also rallied up more than 15 to 20%. So, more or less in line performance with the benchmark indices. But then when you compare this with the likes of Kotak Bank, the stock, I think, made an all-time high of 2,200, 2,150 approximately. It's still trading at, some 1,900 odd levels. So, that itself indicates that there's been a stark underperformance from, Kotak Bank. Now, I also like what, in terms of data, that there's been a long build-up for HDFC Bank. So, the last 4 days, the open interest on a broader basis was around 1,74,000 contracts for HDFC Bank. Now, till yesterday, the data indicated that the OI for the stock was almost 1.92 lakhs. That indicates that there's been a jump of almost 10% rise in the open interest. So, going into results, when we generally expect a rise of open interest, it's generally met with an expectation that maybe the stock would deliver as per expectations or above post results.
Okay, let's move on. And for the first time, Jio Financial Services has revealed its holding company structure with stake in each of the entities. Now, this after announcing its third quarter numbers and holding a con call as well. And Vamakshi from our research desk joins in with all the highlights. Vamakshi?
Well, yes, Jio Financial Services in focus today. Let's first look at the numbers that came through for the company. Now, the year-on-year numbers are not actually available, and hence a quarter-on-quarter comparison is actually merited for Jio Financial Services. And interest income actually saw an uptick of almost 45% sequentially, standing at 270 odd crores. But the PPOP, that is the pre-provisioning operating profit, actually dipped by around 40%, and that was mainly on account of dividend income that the company had reported in the second quarter. Apart from that, the net profit standing at almost 300 odd crores saw a downtick of almost 56% sequentially. Now, for the first time ever, the company released the holding company structure with stake in each of the companies. Apart from that, as far as products are concerned, they announced launch of devices on lease and supply chain financing. Not just that, 3 more insurance companies have been added to the list for insurance broking. As far as their debit card is concerned, the soft launch has started. They've also implemented dynamic QR across the ecosystem and also launched app for merchants. Apart from that, they've enabled Jio Bharat phones with UPI, and around 10 crore Jio phones is the market for them. Apart from that, the company also held a con call yesterday, and some of the important commentary from the con call is as follows. They've remained cautious on the recent market developments in the unsecured segment specifically. They've successfully completed testing of consumer durables and personal loans in the third quarter itself, and they also have some products in the pipeline such as loan against shares and loan against property. So largely, those were all the important takeaways from the results of Jio Financial Services, and on the back of that, keep an eye out on this counter.
All right, thanks very much, Vamakshi, for giving us that heads up. Meantime, Sanjiv, let's also get in your take as to what you make of a Paytm. Positive brokerage notes coming in, a complete thumbs up from UBS. They're talking about a target price at about 900. What's your view?
Well, I guess they got influence seeing ET now and me covering it for the last 2 weeks. When I said this was a one-off of the RBI guideline, and the knee-jerk reaction meant that some of the short-term people got out. I think it's an opportunity, not 900. I would say 1200 is coming in Paytm in this year. I think that transition is fast. Their EBIT margins will be better than expected. And like I said, it trades at the cheapest multiple some of these fintechs trade at. So we have as a disclosure, Paytm is in our portfolio, and we will add more closer to 650. And we think it will cross into 4 figures in the next very, very near future.
Sanjiv, look after that throat of yours, and we'll chat tomorrow, hopefully when your throat gets better.